For more on the currency outlook now, I'm joined by Nick Beecroft. He is a senior FX consultant at Saxo Bank. Thanks very much indeed for joining us this morning. Just for those of us who aren't quite as sharp as we should be after the new year, carry trades, are they likely to have much of an impact on the dollar, in your opinion, over the next year?
I think the carry trade phenomenon is here to stay and will reassert itself in 2011, if anything. I think the price action which you mentioned, where we saw the dollar strengthen a little towards the end of the year, was driven primarily by an increase in yields in the US, which I would phrase as something akin to irrational exuberance. I don't think we're going to actually see certainly short-term interest rates rise in the US this year, and probably not in 2012 either. So I suspect in a world which looks like it's enjoying a Goldilocks recovery, not too hot and not too cold, then the dollar, i.e. a quiet world, dollar rates will stay low and that the carry trade will reassert itself.
No, it's interesting that you talk about the Goldilocks recovery. There are some reasons, though, coming into 2011, why this might not be quite the Goldilocks recovery that we're hoping for. I mean, one of the main ones being the sovereign debt issue in Europe. Presumably that's something that's still pretty high on your agenda, something to be concerned about.
Yes, certainly. In fact, I'd say there are 5 or 6 either economic or geopolitical risk events that face the market. So you have to one will have to be very quick on one's feet as a carry trade investor, because if the world suddenly looks ugly, then of course carry trades will unwind very quickly. I think you have to worry about 4 possible economic events. Do the credit markets become concerned about the US's credit standing? They aren't at the moment. CDS prices haven't moved up. What about the Eurozone debt crisis? Is that going to intensify? Trade wars, I think, is a great danger that we see an escalation in trade tension throughout the year, and especially as we get close at the end of the year to next year's US president's elections. It'll be great political copy to be seen to be bashing China.
Of course.
And then there's the question of whether China can manage its slowdown, from possibly overheated rates of growth. Yeah,
China's got its own issues with inflation, hasn't it? So where then are your tips for the coming year? Where do you think that you should be looking at in the Forex market?
I think you can't go through life necessarily trading for those risk events that I mentioned. So I would suggest that we are in a period of quite benign resurgence of growth, say 2.5% in the States, a little bit less in the Eurozone and the UK, and much better in Asia and in some of the markets assimilated with Asia, such as Australia. So I think a short dollar long of Asian currencies or the Australian dollar will be fruitful throughout the first few months of the year, but keep a close eye on those risk events and get out very quickly if they start to unfold.
Now, we've got, of course, the UK's BOE decision this week. Do you feel like that it's unlikely that the Bank of England are ready to either move interest rates or indeed talk to us anymore about QE?
Yeah, I think that's the case. I can't see interest rate rises for the first 3 quarters of 2011 at least. But it's true that they are walking a somewhat difficult and perilous tightrope given lingering high inflation readings.
We've got high inflation. We've also today got a VAT hike, so presumably inflation may well that may well play into inflation figures as well. At some point, is there not going to be more pressure on them to finally raise rates?
Yeah, looking through, as the phrase goes, those short-term increases in inflation is going to be increasingly difficult. They're going to have an incredibly close eye on the inflation predicted by the difference between conversion gilts and inflation protected, and they're going to be looking very closely at long-term expectation surveys with regard to inflation.
Nick Beecroft, thank you very much indeed for joining us.